Good afternoon and welcome to NYFP. This afternoon I'm joined by Jonathan Corpina of Meridian Equity Partners. Hi Jonathan, thanks for joining me today.
Thank you. How are you?
Well, as the U.S. markets return from the holiday week, we're seeing mixed to flat trading. But now that we're finally in the third quarter of 2011, fundamentally, what do you think investors should be watching?
Well, as you were saying, we're pretty much flat today. End of the quarter was last week. We had a lot of positive economic news. We had some positive news coming out of Greece that led to a large rally in our market. We were up 6%, I think, in about 6 days. I'm surprised we didn't see some profit taking on Friday. Friday was a very good opportunity for investors to take some short-term profits off the table, but they didn't, which leads me to believe that investors are still confident in where we are right now and think the market is still going to rally and move forward. So coming into this week, we've got a very short week this week. We have a holiday schedule. Volume's going to be light. There's less personnel that are here. But still, there's a lot of economic data that's out there that's going to dictate our market, and most importantly, the unemployment number that's coming out on Friday. Investors always look at that. They always focus on that and always use that as a gauge as to where our overall economy is at this point.
Well, Jonathan, now that you've covered the fundamentals, technically, what levels will you be watching?
Right, so if you're looking at the S&Ps, they're trading right now around 1332, 1325, 1320 have been some key support levels. 2 weeks ago, we broke through that 1306 level, which was a important 200-day moving average. So I think we're going to continue to see some support here at these levels here in the S&P. The Dow Industrial is trading at 12,585. That too, once we got through that 12,000 level a week ago, I think investors use that as a psychological level, and they use that as a very short-term support in our markets, even though it is 500 points away. But on a tighter scale there, you've got the 12.5 level that has been important. And on the upside, on a bigger market, 12.8 has been a number that's always been difficult to break through on a longer term.
Jonathan, last but not least, before we wrap it up, you did mention the Eurozone and Greece very briefly, but none of that has changed. And given that we are having the ECB rate decision this Thursday, what do you expect to see from the central bank?
Well, what we've seen as far as Greece is concerned on first part is that, the ball's just kind of been pushed down the road to the end of the summer. That's viewed as good news. As strange as that may sound, it means that the problem isn't going to get worse now. It might get worse in the future, but as long as it's not going to get worse now, then it's going to be perceived in the market as good news. I'm not a fundamental believer of that because it's just putting a Band-Aid on a big problem, but eventually that Band-Aid has to get ripped off. As far as, more information that we get out of Europe, I think we're going to get some more details about involvement, interaction on how the Central Monetary Bank is going to be helping any additional crisis that are there and how they're going to help in the future moving forward. I think investors are going to be a little wary about how much interaction there's going to be, how much money needs to be pumped in. We've seen it here. We've seen it play out here domestically. We're kind of seeing it play out internationally now.
Okay, Jonathan, as always, thank you so much for your time and thanks for all your insight.
Great. Thank you. Have a good week.